on time. We should actually have given a prize for whoever's on time. I'm teasing. I'm
It would be
teasing.
22 prizes then.
Oh, God. Problems. Colleagues, we're going to start in a few minutes. We're going to be joined by our coach, Karen Maitland. She's going to join us in a few minutes because we've just reached out to her and she's just finished off one meeting and she's going to join the second meeting with us now. So we are recording this session. So if you have poor connectivity as you go, Marinda will also just record this and download it. But I also think it's important, colleagues. Why it's important that recording is important is because, when you learn something in class, you don't remember everything, So it's important that maybe you can have the opportunity to go through a little later at your own pace. I also encouraged you at the first meeting, colleagues, is that to also share what you get, in the class. So that handout, as much as it's been done for you, and we're not allowed to, invite other new members. I'd very, very encourage you. You're welcome to share this with other peer businesses that you work with, if they get any benefit out of it. And the same would apply for the actual reading as well. So today we're going to start in 1 minute. It's just 1.5 to 2 minutes past 12. We have 33 people in the meeting. We're about to kick off and we're just expecting about 40 people. We are recording the session, colleagues, as I mentioned. So just give it a few minutes before. I just want to quickly introduce the actual coach. There we are. Karen, we're going to call you the late Karen Maitland. How's that?
Hey, 2 minutes. I literally scrambled. If you think practically, I ran from one room into the other room, and I'm here.
Fantastic. As long as the room, okay, that's fantastic. We're just waiting 1 more minute. We've got 37 people in the meeting. We're expecting just about 40. So awesome. We're good to go. Colleagues, thank you so much for being punctual. We deeply, deeply appreciate it. We're also very excited today. We have the privilege of having Karen Maitland as the person that's going to talk around financial management and the topic of finance. And we were just meeting a few times earlier with Karen, and it was quite a, what's in that handout for those of you all that have been through it is a broader perspective, not just one particular area. It talks from financial management. It talks about costing. It talks about way to reduce costs or overhead. So it's a broader context. We try to bring it in the context of where the businesses that we are working with in Northern Cape, the 43 of you all are in, and hopefully it'll be of some value. But I think today's session is very important about, Karen will do a very quick overview of the topic, and then maybe in the next 15-20 minutes, and then we can get into some engagement topics. And then Karen, you have to answer those 3 questions first that I posted on the chat, as the first first go into it. But let me start. And colleagues, it's super excited to see everyone of you all. It's a privilege to have Karen Maitland. She's a qualified CA. She's also a very, very big cheese at SAICA, colleague. She's from the Council of the Eastern Region. She's also the deputy chair of the small to medium practices for the National and Global Council of SAICA and of all its 54,000 members. But I think importantly, Karen's got a lot of experience working with practitioners that work with small to medium businesses. And I've known her for the last 8 to 10 years, and I know she's got deep passion. And that's why we chose Karen, to actually have the conversation with you as such. And I think also more importantly, she was sharing with us at the heart of the conversation, like having experience at a contractor level. Karen's dad owned an engineering firm. And so for 8 to 10 years of her life, she was the financial manager for that engineering kind of company. So it was the absolute sweet spot when we were selecting, somebody to engage with you on this topic. So, colleagues, we're hoping that this is going to be a meaningful discussion. You'll notice Karen has lots of energy. It's normal. Nothing's wrong with that. With it as well. And I think we want to ask questions. So please post questions in this chat. Please post questions on the WhatsApp chat as well. So, but Karen, just remember you have those 3 questions to start off with before we go. And then I think, colleagues, you've been on the rodeo before. Let's do the exact same thing, Shamantha. I think it was very well received. Hey, is Silo in the meeting today? Is William in the meeting? So I'm assuming you guys got your prizes, right? It wasn't a airbrush picture. Silo, Willem, you got your computer and you got your prize.
Yes, most definitely. Hi guys, it's Wilfred this side. So very happy, very happy. Thanks so much.
Fantastic. We're going to do the same thing this week, Shamantha, I think.
Yes,
we'll give
definitely.
another laptop, I think, just like that. And we'll also give another tablet for those that are mobile. But I think the tablet will be for the best sets of questions or most engaging best questions. And then I'd like the other category for somebody that's sharing, Karen and Shamantha, somebody who's sharing that, best experience with financial management, what works. Maybe we'll give the computer. But I think you know how the rodeo goes. But I think just to be fair, maybe we'll have to say Willem and Silo can't win the computer again. So that I'm so sorry, Silo, Willem. We want to spread the love into this particular conversation. So, colleagues, it is now 7 minutes past 12. We have 43 people. Karen, we full house. Awesome. As promised, you're obviously popular or because you look good, I think. So welcome. Over to you. I'll be here. I'll be watching questions. And if anything comes, if you need anything, just shout. So welcome and over to you.
Thank you so much, Akash and Shamantha and everybody from the Sigma team really for having me. And I have to say that it's been a whirlwind really getting involved and coming to join you and sort of picking up things on the fly. But I think that's with business as well. As this is something that we were discussing last week, and I the idea of, like I was saying to Akash, I grew up with an engineer. Okay, so I think sometimes my dad was a mad inventor and would always have all these different ideas and would always be trying something new, had more than one business. Not all the businesses worked. Some of them worked, some of them didn't work. And eventually the last business that he had actually had a 30-year lifespan with some ups and downs and some challenges to it. Different competitors coming into the market and landed up being, by the time they sold the business in their retirement, was the last family-owned business in the area that had sustained for 30 years. So, they often talk about having like 3 or 4 false starts before you start getting going. And that's part of business and part of life. So grew up in the space, literally was working with my family and working in the business. I shouldn't sort of say like from when I was 11, 12 years old. And the irony, if I share a little bit, is that I declared I would never work for the family business and went and became an accountant because I thought nobody would ever need me, and landed up doing the financial management for my folks' business for 10 years. So that plan didn't work so well because every business needs financial management. And it's one of the things that I'm bringing to everybody here, and why I'm so passionate about it, and why I've spent my career with small to medium-sized practitioners, because small to medium-sized practitioners support small to medium-sized business. And I think that's the largest part, and it's the part of our economy that grows the most. And so this is where the help is needed, and this is where the skills are needed to help people do what they need to do. Now, most people that are in business and in your sort of business and contracting and engineering and in that space are, you know what you are doing. You know the area that you're working in. You're very good at what you know. But everybody needs the finance person to walk next to them. I've always got a joke when I talk about sort of like the managing director with a financial director. The managing director is the husband. And forgive me for being sexist or genderist here, or whatever it is that you want to say. But I always say in a business that you've got the strategy person, the big idea person, And then the financial director sometimes, that old joke is the wife. And together in business, the couple makes the team that manages the household and manages the work. But there's that saying in my big fat Greek wedding that, the man is the head of the household, but the wife is the neck, and the neck turns the head. There's a teamwork that happens, that you've got one side that has big ideas and the other side that makes them, figures out if they can work. And financial management is very much about resource management. It's around what you have, what you need, what can you do. And, Kash, asking me to answer those 3 questions, there's a reason I was a bit quiet in the group and didn't answer them straight away, because I was thinking that's kind of like jumping in the fire and straight off. But maybe that's exactly what we need to do. With this, you need to know where you are now. I think when we walk into businesses, and if you're walking in and offering to help people with, or you're speaking to business owners, and you're going to guide them through a process of finding the pulse of their business. Financial management, cash, money is blood. And I used that in the notes, and I deliberately sort of wanted to elevate that. Money is the blood of a business. It's the life force of a business. Back in COVID, we were talking about how the health services were saving lives, and we were talking about how the financial guys were saving livelihoods. But we were both needing to make sure that we had healthy blood running through our businesses, and making sure that we were managing it correctly. And so what we need to do is, when we come to businesses, we need to ask you, what is your health check? Like you go to your doctor and you say to your doctor, take my pulse, take my blood pressure, what's going on. So when you're looking at this and you're getting to know this, and when you're asking me, what should we be, what prices should we be selling at? How should we be costing things? The very first question I want to ask you is, you've got to know your own business. You've got to know what you do. You've got to know what it takes to get what you do done. And you've got to know the inputs into that. And I think that's quite the core part. Before I can start talking about selling prices, and before I can start talking about any of that, and I kind of now want to rush through to a certain section of my slides now. I want to sit down with somebody and say to them, what product or what service do you offer? And do you understand what it takes to make that service or product happen? Okay, and really unpack that into a lot of detail. So, we've got all of this, and a lot of these notes are going to speak to exactly, and I'll come back to some of this in a second, but you've kind of got me wanting to come to this place first. Because before you can looking at sales, and before you can start answering these questions that you've given me, because the questions that you've asked me are sort of like, what are the practical ways to negotiate better payment terms? What are some of the common financial mistakes small businesses make with pricing, and how can they avoid it? And what strategies can small business make to implement and reduce operational costs without compromising quality? And it comes back to, what are you doing? And let's focus on that to begin with. We're going to spread out from that as we go along. So let's get back to basics. And so, what is it the service you're offering? What is it the good you're selling? One of the biggest problems I think people have when it comes to costing and coming to looking at their business are the hidden costs.
Yeah, true.
If I go back to, my folks actually landed up at one point running a security company, and it's very easy to cost your beams and to cost your panel and to cost the parts that you see of an alarm system. But do you cost in the cable? Do you cost in the glue? Do you cost in all those consumable pieces and all the other pieces which people don't always see as part of the service that they're offering or the good that they're offering? And those can often be big black holes, because people look at the big pieces and they don't look at the little pieces in between it. So when I say, do you know the business you're in, and do you know what it takes to make it happen? Then I'm going to ask you, what are those elements, and do you know what the value of those elements are? Because that's most probably going to be my starting point. From there, what do you need? One of the big things, when things are going well, we might not track our costs very closely. You know, when life is good, like when the world is good and the life is great, it doesn't matter if you're buying coffee at Seattle every morning. It doesn't matter if you are shopping at Woolworths instead of shopping at Checkers, because when the cash is flowing and when everything is comfortable, it's okay. But what we should really be doing, you know, that saying of watch the pennies and the pounds will look after themselves.
Yeah.
What I also want people to say when we look at this is we've got to start saying, well, I use the word on this slide, seepage. Are you very aware where all your money is going to? Where you're spending things, and are there things that you're spending that are not necessary? It's kind of like going on diet. So when a financial person comes in, or when you're looking at yourself, when you're saying to yourself, okay, fine, I've got this business, I need to take stock of my business. I need to sit down and look at it. The very first thing you need to do is write down where you are right now. Okay. You need to sit down and say, what are the costs that I'm incurring right now? How much am I spending on my inputs right now? Am I taking care of the hidden costs that I need to spend in order to make my clients happy? Am I spending money on things that I can go home and I can make coffee with a kettle and that, or am I going to Seattle? Where is my money going to, and what am I spending money on? I think that is the most important part of any of this conversation that we have. Okay. The second part is going to be, what of those costs, is there a better cost, a price out there that I know about it? Or have I just got so used to dealing with the people that I deal with because I'm familiar with them? Okay. You know, because it's convenient, because I'm familiar, because I've been working with this person for so long, I just take the price that they give me. And sometimes having the same relationship with the same person for a long time is not good. How many of you have phoned your insurance company and asked them for a new quote? Because, you know, if you stay with the same insurance company year after year after year, we get the increases just every year. It comes through a 5% increase, 10% increase, 5% increase, 10% increase. And because you're loyal to that insurance company for so long, if you go to another insurance company and get a new quote from that other insurance company, you might land up finding that you're paying a lot more for the same insurance and the same coverage just because you've been loyal to that supplier or to that company. And so one of the things that I think is really important for people to take into account is, are we actually paying the right price for our goods? Are we paying what we're paying because we've almost fallen into habits and complacency? Are we happy to have uncomfortable conversations with the people around us to make sure that we are as efficient as possible with the price we pay? And not to be scared to haggle, not to be scared to ask for better prices, not to be scared to get quotes around us to say, is this the best price available to me? So it starts with costs. Everything we're going to talk about today starts with, am I paying the right amount? Am I buying what I need? And am I spending things on things that I don't need to spend on? Because we can't, when things are tough, we can't spend on unnecessary things. We've got to optimize everything we have. And start there. Because once we start managing the costs, we can start looking at everything else. I'm not sure if this is where we're starting from. Like I said, you kind of threw me for a loop starting in the middle rather than at the beginning.
That's fine. So if I summarize what you're saying, this is the heart of the conversation today.
Yeah.
So what are the other important areas in financial management to your, I mean, I love that example about you just take things for granted. And I know, for example, I shouldn't share this. We have our accountant for 21 years. Not once have we benchmarked the accountant, as an example. And I hope the accountant's not in the meeting. Then I'll be shot. Or at least then he'll sharpen his pencil. But the same applies for insurance and the same principle about the hidden costs. And I know you use an example, an analogy about Quad, because we have all technical people and this, and
Yeah.
they technically, but what Karen is saying, colleagues, is that there are hidden costs within a business that you
Yeah.
don't see easily. It's not only the costing of the actual equipment or the BOM costing for for what you're fabricating in the steel environment. Okay, so if this is the hard Karen, what's top of mind? What would you say? Would it be management accounts? What would be the top other area?
Okay. To me, the most important thing is two things. One, management accounts.
Yeah.
Your management accounts it's your feedback. Okay, it's your feedback. So I know I put the dashboard into the notes quite deliberately, that I find when I talk to non-financial people and technical people, when they get presented the financial reports or financial information, it can be very overwhelming, and it can be very we don't want to really engage with this. We don't like what this looks like, or whatever it is. It's yeah, it's not nice sometimes to have to look at this. But the financial management, and I'm talking now, there's a whole lot of different ways that we can get this feedback. So take the analogy of driving a car. If your business is the car, okay, and this is what the economy and the life of this business is to drive it down the freeway or drive it down the road. And at the moment, maybe you're doing some 4x4ing and going off the road and trying to get back to the smooth road. If you're going to drive this car, there are a couple of things you're going to do. Firstly, I don't think any of us do it like we were supposed to when we got our driver's license, but aren't we supposed to walk around the car and make sure that the big things are okay, that the tires are pumped up, that there's no obvious damage or obvious problems that we have? And that's maintaining, the outer and the big ideas. But then we climb in the car and we turn the car on, and we actually have to look at that dashboard. Now, that dashboard doesn't cover absolutely everything about our business. And sometimes your accountant or sometimes people that are working with you will give you a 50-page report and say, hello, here's your management account. And you're looking at this and you're thinking, where do I start? What you need to sit down and think about is, just like the dashboard in your car, my information needs to be real time. My information needs to be as up to date and as current as possible. And today, with the technology that we have, with the systems that we have, we can literally see information on a daily basis and a weekly basis and get reports as regularly as that. And the more stressed or the more uncomfortable we are in business, the more regularly we need the information and the more up to date the information needs to be. Okay. If you're going 4x4ing in the bush, you need to know right now exactly what you're dealing with, rather than if you're driving along the freeway and you can maybe days in and days out a bit. So your information that you're drawing needs to be as up to date as possible, which means that whoever's capturing your information and whoever's getting the information to the system, that is a critical skill that needs to be working and functioning well. Okay. That information then you need to look at. But what I want you to do, yes, you need to look at the whole big picture at least monthly and have your month end done and look at the big picture monthly. That's important. But I've got an idea and a philosophy that says there's certain things you're going to need to track more regularly than that. And there are two things that I personally like to track regularly, and sometimes even on a daily basis. And when you've got a business where you're navigating the off-road and navigating the treacherous part of it, I want to know every single day how much cash I have in my bank. And I want to know every single day what sales I'm making. Okay. And I want to track that against what I anticipated or forecast. Because if I was anticipating certain sales and I'm not meeting those targets, why not? And what do I need to do now to sort the problem out? Because when we sit down and we work out a plan, and I'm sort of working my way backwards here, but I'm hoping that when you've got your management accounts or when you've got your information, you're going to measure it against expectation. You're going to measure it against a plan. You can't do this just day by day by the seat of your pants. At some point, you've got to sit down and say, based on my past history, this is how much things cost me. Okay. I am going to go and get people to sharpen the pencil and try and navigate those costs as best as possible. I also have to take into account inflation. I also have to take into account Eskom has got certain things they want to charge us. I'm going to have to pay staff certain increases. So I understand that costs are going to change into the future. And I need to know that I need to make a certain number of sales in order to make sure that I can cover those costs. Okay. On a day-to-day basis, how am I doing in meeting those sales targets? Because everything starts with what I'm actually getting from other people. Okay. From that, am I turning those sales into cash? Am I chasing people up and getting their money? One of the biggest challenges we have is it's all very well and good to make lovely big sales figures. It means nothing if my money's sitting in your pocket. So in the notes, I had my favorite saying that I had in a financial manager's office that I live by. I saw it when I was a young 20-year-old, was sales are vanity, because everybody loves to go, Samantha, I made so many million rands worth of sales. I'm so amazing. But profit is vanity. Well, profit is sanity, I should say, because if my sales don't cover my costs, I'm not going to stay very sane, because that means that I'm spending more than I'm making. And it ultimately, if that doesn't translate to cash in my bank account, cash is reality, then we have got a much bigger problem. So I want to know that my sales are on target. If my sales aren't on target, I need to speak to my marketing team. I need to speak to people around me. I need to start looking at, how do I need to diversify my sales? Do I need to find different things to do? Is my costing right? Have I done the right, got my selling prices right? And then am I calling the money in for the sales that I'm making? Because if you don't start there, the outflows and the expenses are going to be a problem. And that's where you're going to land up in stress, because the test that anybody's going to have when they measure your business and look at that health of your business is, can you pay your debts as they become due? So as your creditors knock on the door, as the tax man knocks on your door, can you pay them as they become due? And all of that starts with making enough sales to cover the costs, to call in the cash, to make sure that your bank account is managed. So every single day, if you watch your bank account every single day and you watch what's going in and going out, and you are able to make those corrections to your steering wheel as you're driving down the road timelessly, it's a much better position. On my dashboard, I want to see, is my oil light going on? What speed am I traveling at? And that's the information I need to get out of my management accounts. But by the way, Akash, I know we're accountants and we like Excel and we like columns and we like numbers, but the best management accounts are visual. The best management accounts are graphs. The best management accounts are graphic. I want to give, especially to people that are engineers, I think if you give them a pie graph and you show them how much of their sales are going to salaries and how much of their sales are going to the different types of expenses, it makes it real to them. If you show them a trend analysis around or seasonality of their sales, and you actually show them what it looks like in a picture, I often think the message comes home faster.
Okay, fantastic.
As to how to look at. So please also create a set of accounts that very quickly at a glance you can see whether or not you're on the right track or not.
Okay, so
but
the second
you need
big
the data.
theme, sorry, the second big theme is this management accounts, having your pulse or the dashboard into it. And the one thing that resonates to me, and I know accountants are lazy, and I can speak freely, is that clients should get their management accounts within the first 5 to 10 days of the next month. You should not be doing management accounts 3 months later. So colleagues, if you are not getting your management accounts within the first 5 to 10 days of the month, you are wasting your time by paying and getting that particular service. Because as Karen was saying, you need the pulse. and you need to be able to know A, B, C, like into it as well. Okay, fantastic. So, and the other point I must reflect, I know of a large retailer, I don't want to give names, it's one of the most irresponsible ones, very, 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 very big in South Africa. And many businesses have died because of cash flow, because everyone says, oh, I do X amount, I do 50 million or 30 million turnover. It means nothing if you're not collecting it from that large retailer. And they used to make the suppliers hang. And so, colleagues, you need to work for yourself. Do not work for the landlord. Do not work for somebody else. So putting that cash in your account, as Karen was saying, into your pocket is critical. So, and she's going to give us some tricks now. And I think that's the third kind of topic on what are the things that you can do to make sure you bring down that working capital cycle and put cash into your pocket. Sorry, back to you.
No, 100%.
Sorry, Karen, one more thing I wanted to ask you. This is Neil from Sigma.
Hi, Neil.
You mentioned the dashboards and how important they are, right? And I think it's like critically important to have this dashboard at your fingertips, almost on your phone or whatever it is, if you can, so it needs to be some kind of system that you're operating. But how important is it to track some of these things against like targets that you probably preset in your dashboard, so that you can see where I am, where I'm going, and what's the gap kind of thing.
No, that is absolutely critical, because you see, okay, so let's go back to one monster under the bed here we haven't really spoken about is the word risk. Okay, so risk is defined for us as the difference between what actually is happening and what we expected to happen. Okay, so if the gap between what is actually happening, what we expect to happen is big, that's high risk. If it's close, it's low risk. So what the budget is your expectation. Okay, so when you sit down and budget, and by the way, budgets are fluid and flex, they don't have to be, they can be dynamic. You can readjust as circumstances change, because sometimes I think they've got to be realistic as well. But to measure against what you expected to happen, because the costs coming up, the things coming up, and you're budgeting towards it. So measure against your actual against your budget. Okay, and also then know how much is left of that budget to spend. But I had one of my best accountants. He was an older gentleman who ran he was running a food market at the time. And he had on a day planner, so he had no technology, but he had on a day plan, and he tracked 3 things every single day. He tracked what was my sales today. Then against that, he had on the same day last month, what was my sales? And on the same day last year, what was my sales? Because in his business, it was seasonal. So he wanted to see whether or not he was moving forward, going forward, because to him, those were 3 important things. So in your business, what are the moments that, is it from last month to this month? Is it last year to this year? Is it last week to this week that you are tracking? Is it your budget against your actual, that you are seeing the movements as to what you're needing to move? And one of the things that I also would like people to understand is that if you know your business really well, you will know the indicators you need to track, because you'll know the things that keep you awake at night. You'll know the things you worry about, the fuel price and the cost of your how much are you spending on fuel every month? Well, if you're spending a lot on fuel and fuel's starting to run away with you, you're going to start telling your people, okay, no, you don't go backwards and forwards to the office 3 times, you go once. Okay, because we're now going to start putting policies in place to manage the number of trips you make. You can't go fetch your kids and everybody else and then come back to the office. You've got to be, we're going to start being careful about these costs. You can't have coffee and tea 20 times a day and have 6 teaspoons of sugar in your coffee, because we're going to start monitoring tea and coffee expenses. Whatever the situation is, and I'm being facetious a little bit in some of the examples I'm using, but what are the things you're worrying about that are getting out of hand? And you'll only start to see the change if you're monitoring them on a regular basis. It can be on spreadsheets, and it can be, like I said, my gentleman that had a calendar on his desk that just kept his finger on the pulse, which is so important. Getting cash into your pockets, Akash, is the most critical part of this.
No, I see that. Yeah, I see there's a comment in it as well. And there's a colleague saying Anglo-American is 60 days. Colleagues, I was talking about the retailer just now, not Anglo-American.
Mm.
They were paying suppliers anything between 180 and 240 days. The
Mm.
reality is 60 days is not ideal, but it's a whole lot better. Colleagues,
Yeah.
I also need to make you aware, and I'm a qualified chartered accountant for 25 years. You all know it's 60 days when you get your Ariba number on Anglo-American. If you are proposing not carrying that in your proposal, you are shooting yourselves in your foot, as an example into it as well. Jacques, you've got your hands up. Go for it.
Yes, sir. I was the one sending the comment through there. So
No, I know that.
yeah,
But
so I just wanted to explain something. So what happened is actually the scenario was we are on a 15-day or 30-day payment term with Anglo, and then for some reason I'm just making example of Anglo,
Okay.
not to say it's for them, but yeah,
Yeah,
for
yeah.
some reason they updated their Ariba system. So
Yeah.
now when we started doing GRVs on the Ariba system, we didn't want to take through the invoices. So now we're sitting with invoices that you have to load a query case and all of those stuff, and that's why it became
So it's
with
like an
a 60-day.
administrative. Okay.
Mm.
It's
Yeah.
an administrative thing, and we have spoken to the end users about this, and no one just seems to. I don't know. Yeah, what
So
can you do in a case like that?
yeah, Judge, just for you one-on-one, just pop me a detail, like as I've said in the last week's class, and I will escalate it. At least I can try myself, in addition for you to continuing to do it. But yeah, this is a changeover. But my point, Jacques, going into it, if you know your 60 days, when you're proposing, you understand what I'm saying, build that into your costing. Does that make sense? But
Yeah.
I think two issues. Send me an email now about your specific invoice numbers and your Ariba number. I will knock on a few doors as well. I'll try my best, no guarantee. But the second point is, colleagues, I think everyone now has gone to 60 days on Anglo-American. But colleagues, it's not only Anglo-American. If you're dealing with Impala,
Everyone.
if you're dealing with Wear Metals, if you're dealing with SBS tanks, you're dealing with EnviroServe, know your terms when you're proposing.
Yep.
And in some cases, cost a little buffer. You technical guys call contingency. We do it all the time as an accountant, in terms of the cost of capital or the cost of funds. So there's a cost of funds to it. Jacques, I hope you're okay. Drop me a separate email. I'll personally chase it up. And then, but it's just a general comment. There's one more comment
Yes.
from Alice. Sorry, thanks, Jacques. There's one more comment from Alice. Alice says, what technology solutions can be implemented to automate your cost and management accounts? There we go. I mean, Karen, there's various ways you can save it as CSV files and dump it into whatever. Maybe you want to take them through a few of them.
So one of the things is wherever you're getting your data from, to bring it to a central source. So, I mean, as accountants, we love Excel. I think we were born and raised in Excel. And there are, I mean, all the different accounting packages you have, and I don't know which accounting packages you're working on. I mean, everything from Xero to Pastel to SAP. There are report writing elements to all of these accounting packages, and the simplest ones have them to the most complex ones, and use those report writing functionalities of your accounting packages is really, really important. So don't reinvent the wheel unnecessarily. If your accounting packages have a report writing function, and often these report writing functions can be personalized, that you can make it what you want. The cost accounting, again, it depends on the type of costing you're doing and the type of projects you're involved in. Be careful also about automating too much, because you've got to keep your eye on it. So the one part of automation that I like is to gather the data and have the data come into a certain point, and you can have your formulas and that set up to cost. But you've got to keep tracking that information is up to date, that information is accurate. And you've also got to, like Akash was saying, sometimes you've got to build, you've got situations where you're going to have to build extra in or adjust it because of factors that are unique to that particular scenario. So definitely there are tools available, and there's a host of them. There are a lot to them, and that's sort of more on a specific based on your systems that you're using as to what systems will work with it. But
so we've got somebody who wants to contribute or add, but before Paul, you can come in now. But just before that, I think it's very simple, colleagues. Just check what system you got. There's could be an option to download, CSV, Excel, and but colleagues, it is not a brain surgery. You can actually print or PDF your bank statements and email it to your bank statement, your accountant, and ask them to do it, to capture it quickly. Most of the businesses here, Karen, have got bank statements, anything from 8 to 20 pages. It's not like hundreds of pages.
That's easy.
It's easy. Colleagues, you need to hold, and I should be careful now because accountants are going, you need to hold your accountants accountable. Don't let your business become a box job where, accountants got 40 clients, they put each one in a box and then they take one box at a time. So you don't want to be a box job. Sorry, Karen.
So for example, if the businesses are like 8 to 20 pages, there's accounting systems which accountants nowadays are coming to the clients and they're putting, for example, Xero or these cloud-based accounting packages on, where the bank statements are actually uploaded daily, actually automatically daily, which means that you actually can get access to reports daily. And to speak to your accountants about the techniques and tools that they have to make your life easier as well.
Okay, Alice, can I just ask, just specifically to your, before we go on, Paul, specifically to your business, can you just pop us a meeting? We'll set up a 30-minute huddle. We'll understand what you're doing in your business and how we can automate it, for you as well as such. Cool. Paul, you got your hand out for a long time. Your hand must be paining. Go for it, Paul.
Greetings, colleagues. I hope everyone's well. Karen, I know you from SIBA, from yes, so I do see your when I'm doing CPDs, I see you have quite a few of those every time when I go through my CPDs. But my question isn't more focused on the financial management side, but more on the human resource side of things. Because we can obviously have systems in place, but if we have people who don't know how to use the systems or get basically the full range or how to use the systems how can I say this? To use it to its full capacity or potential. So we have these, like we're using Xero, but there's a lot of information there because we had moved from external accountants and now we're doing everything internally. So our current situation is there are a lot of journals that were done on Xero, and there were a lot of entries and reconciliations, but things are just fishy there because we moved obviously from an external accountant. So I want to know, would it be best if we start from scratch and do all the financials and upload bank statements from the beginning of when Xero started to become active? Because there are financials from 2022 that they are very fishy. They're not up to accounting standards. I'll make an example. There'll be a management fees for like 10 million that we cannot really trace. So that's one of the reasons why the company actually let go of those accountants. So those are some of the issues that we are experiencing. So at the moment, everything is just done, on Excel on the side, but not so much on Xero because of these things. So I want to know, would it be ideal to just start from scratch, get the bank statements and start to allocate everything accordingly?
Oh, you got a
your
big
information,
professional liability question.
You've got that one is huge. I mean, that one there's a whole lot there to unpack in a different conversation. But one of the things that I would like to say, just to pick up for this forum, and Akash, if Impo needs to chat offline on this one, I'm happy to talk to you about this one offline as well. But your information has to be accurate. Okay, because garbage in, garbage out. You cannot make decisions on inaccurate information. And journals, you want as much automated as possible. So I speak to Alice. I do agree. I want my invoicing and I want, my bank feed and all the rest to be as automated as possible. So I don't want things to be. Journals are management override. Okay, so journals are the exception, not the rule. For financial reporting, especially for management accounts. Management accounts are the routine, regular transactions that are happening on a regular basis. It's not the big complicated stuff that happens at year end. So I mean, they're two, depending on your resources and all the rest. I mean, my gut feel would be I'd go back to the beginning and recapture, and make sure my system was right to compare. But you've got to, for the everyday person, if I was changing systems, I wanted from day one, set it up right, start as you mean to continue, and use the system that you've got to its full capability.
Yeah. But I'm poor. I think so, Karen, is remember we have to check whether the financials are signed off or not, because that adds another complex. I'm not saying you must continue with illegal. All the tax submissions have been made on
there's a
account. And
there's a big problem there.
That's one thing. It's not everyone who does things ethically. As much as we can say that we are accountants and we need to be accountable and we need to do things ethically, the moral side of things, it's very subjective.
You know what, you raise a very good point here though, Mpho, because as much as cost cutting is good and being lean and mean and to the bone, there are some things that you get what you pay for. Okay.
Yes.
And there are certain things where and I use this example, Akash, with us as accountants and as professionals, is if you had to go to a doctor and you get the doctor that is going to charge 50% discount, the doctor that charges medical aid rates, the specialist that charges 3 times medical aid rates, and you need complicated surgery, you perceive the one that's the expensive one as being the one of value, so long as he can back that value up.
That's true.
And sometimes there's certain things where it pays, sometimes you pay more to save later. There's certain elements of your business where you actually have to make sure that you're getting the quality and the level of standard of care, because although maybe their charge out rate is expensive now, they do less and they do more for you, and the level of expertise and care you get in that short amount of time is good. And you get other people that will spend a lot of time and not give you the value that you want. So sometimes you have to spend to save. And that's again understanding the type of costs that you're involved in.
So Paul, maybe I think yours is a little bit complicated, right? Maybe if you need like just a quick huddle, Karen's volunteered, but we'll even just to go through, I think, to protect you as an owner, but make sure you do the right thing, because there's various dynamics. It's not only about the manual labor, but it's also about the legal obligation that you've signed out. And then there might be, depends on which professional body they belong to, there could be some recourse if it impacts your particular business. So maybe if you can just write an email, we'll set up that half an hour huddle for you. Is that okay?
No, I think that'll work out best.
Okay, fantastic.
Awesome. You've raised a hornet's nest of something that's bigger, but the lesson I want for everybody else is choose your service providers carefully. And there's certain service providers where they may seem expensive, but the value you get from them in the long term will save you.
So
the question here, Sipa's got.
I see some questions here. What are the types of financial management? Now you've opened a hornet's nest. Colleagues, it's very simple. It's, for your type of business, it has to be visual if it's possible, but it's a typical income statement balance sheet with a cash flow. Income statement balance sheet, tutor and a cash flow. Very interesting. Where do we receive from accountants? So typically, you need to have a clear. You need to pay for the service for getting management accounts. So some people confuse having an accountant to getting management accounts. Accountants typically would have, lots of them drafts your financials, does it annually. But if you want it on the pulse, if you want it every month, if you want it every 5 to 10 days after month end, then you have to pay for that particular service typically into it as well. And there's one last comment, and then I'm going to stop evangelizing and hand it back to you. There's a question around for you. Maybe you can go first and I'll add, Karen. Okay, so what happens if all the costs are too high and your customers can't bear it? What are my options? What do I do? Do I business re-engineer myself? What do I do, Karen?
Okay, so I'm going to take it one step back and just talk about, with the accountant, there are a lot of accountants that offer sort of retainer management services where they'll come in as a financial manager and walk with you and help you and use that, suck at the marrow out of that one and get everything you can out of that person and hold them accountable, like Akash has said. Sipho, when your costs are rising and you have got a situation, because basically you're getting squeezed here. You've got costs that are going up, and you've got customers that are the cost threshold is too high. Now, there are a couple of questions. You want to find out why the customers can't absorb that price, because you've been pushed up. What is stopping the customer from being able to absorb the high price as well? Is it that your competitors are all undercutting each other? Okay, because you've got to stay competitive, but this is something that, not to talk about fixed price fixing or anything else like that. As an industry, you've always got to be careful about undercutting, because eventually we all cut ourselves, cut our nose off to spite our face. But if your customer is financially stressed, we've got to find, firstly, my first instinct is to say, is there another source of customer? Is there another source of revenue that you can find? Because if you can't cut your costs any lower, because if you cut your costs lower, you're going to start sacrificing quality, and you're going to start sacrificing safety and other such things. And you've sharpened your pencil as much as you can. This is not a healthy place to stay, okay? Because you're basically taking on your customers' problems. So the first thing, you're going to start cannibalizing your own health if you're unable to keep your margins what you need to be. So this is when you're going to have to start restructuring your business. You're going to have to start looking at other sources of income. You're going to have to start retooling and going back to the drawing board, because you've hit a wall, and if the customer can't go any higher, you're going to have to go sideways. Akash, I don't know what your thought would be on that one.
Yeah. So absolutely. I'm thinking about, like sometimes you never reprice your cost. The insurance example you gave us before, right? So I think the one opportunity is to re-engineer your business, where you go back and look at it from a zero-based, from all the costs. But colleagues, the reality, Sipho, is if you come to the point the customer can't accept it, you can't have this entitlement and say, oh, customer, it's wrong for you. Customers will go where they get in the best value, and that's the natural part of the world. But there's a point where we realize that maybe you need to introspect. Maybe you shouldn't, and I say this respectfully, I'm not saying go out of the business now, Sipho, but sometimes we need to ask, should we stop offering this service because it's costing the business, as opposed to adding value, to it as well. Sometimes you have a loss leader because you're doing this because you're getting 10 other items. But if you're not getting the 10 other items, you need to say, should I offer this particular service or product into it? And that's the reality. So, the suggestions, re-engineer, look at from a zero-based cost approach, look at everything that makes it up. And everything is a cost, colleagues. When you say you measure time, you need to do it scientifically. You can't just thumb suck and say, half an hour. You have to do a work measurement study to say, okay, that bending of that material or that iron, where the stopwatch takes, do it 10 times and the average is 32 minutes. And then you calculate into it as well. But if you do all those costs zero-based, it doesn't, then maybe you need to stop doing that service. You agree, Karen?
No, 100%, and I agree with you on the way you need to look at the whole system that you're at. So if you've got a couple of services, there are certain services that you offer because it, exactly like Akash says, it brings in bigger fish. So sometimes you've got to bait the water to bring in the whales. And then that some services that you offer will subsidize other things that you do. But you've got to be careful, because sometimes those loss leaders can start taking over everything else. But you've also got to look and say, like, is this something that there's a future? You can't go past the point of no return. And also, we're in business, not in charity. Okay, that's the other part that you've got to keep on reminding yourself, is that just your customers are going to come to you with sob stories. They're going to come and say, but I can't and I want, and but then I can't offer you the service, because at the end of the day, you've got to pay salaries, you've got to pay your rent, you've got to do what you need to do. And if you keep going down that path, they're going to make their problem your problem. Okay. And there's a point in business where you go, if I take 2 more steps, I'm going to drown myself. So I need to stop and not go down this path because it's too far. And if you don't keep your finger on the pulse to see, how deep you're getting, That to me is the problem, because most of the time when people have gone past that point of no return, they didn't actually notice that they had, because they weren't watching what was going on. So your clients, if they are at capacity, there's nothing you can change about that. That is a hard, that's a hard limit. If they have no other way of doing things and no other way of changing things, if you can't change their bottom limits anywhere, then either you've got to find other markets, other products, renegotiate. And just by the way, people always go to, Akash, you and I must probably had this experience in accounting, where people go, well, there's somebody that'll give it to me cheaper, there's somebody that'll do it for me at a different price. How often do they go to that and they come back to you 6 months later? So the one thing you must never sacrifice is the quality of the work that you do. Because people pay for quality as well, and people pay for relationships as well. Andrew?
Andrew, yeah, sorry, Andrew. Go for it, Andrew. You just unmute. Are you there, Andrew? Your hand is up. Hi, Andrew. Can you hear us? Nah. Andrew, are you there? Okay, we'll continue, Andrew. If you can't hear you can post, you can type your thing. We can see your hand up, Andrew. You got a question? Okay. Are you there, Andrew? Can you talk?
Yes,
Okay,
sorry for that, Ash.
Go for it, go for it.
I'm just using my cell phone to connect, so I had a call coming through. I just wanted to make a comment on that point of I will get it cheaper somewhere else. The thing with that thing is that most of us, when we price, we look at the bottom line, the net profit after tax, and then you get a client that says to you, I can get it for cheaper somewhere else. And then you ask yourself, if you can get it for cheaper somewhere else, what's the net profit after tax is going to be for that business? And then they utilize that business to take you out of business. And 2 months down the line, they increase the value of that contract to almost 20% more than what you were quoting for. That's what's happening in this area currently. So I just wanted to comment
that's unscrupulous.
It's not literally true that they will get it cheaper. They will do it cheaper to get you out of the system, and within 2 months raise the contract value of the other contractor to 20% more than yours.
Yeah. So it's lowballing.
Yes.
Yeah, I mean, that's an unethical practice. It's people. I always sort of maintain that you've got to keep the quality of your work, and you've also got to you've got to be careful, because the problem with that kind of situation is that everybody starts trying to compete, to get lower than the other person until everybody's running off the pier, and it's it's a challenging situation, that one, Akash. I mean, and that's you're dealing with ethics there.
No, it's a hard one, but also, the one thing you need to do is you also know the suspects is, the more unique you offer something, that's one of the differentiator, that you can move away from other people, or you have a variety of products. I'm not saying that's the kind of solution, but I think what's important is that if you offer something different, if you offer something unique, that could different. Or you offer varied, could be different. But I'm sorry, Andrew, I'm sorry, but that's just the wrong type of people. That's like criminals in not so many words, Andrew.
Yeah, and it's one of the things to sort of say to your one of the parting shot maybe to your client in the negotiations is to sort of say, well, you need have you looked at this over the full term of the contract? Okay, so what are the escalation clauses and all the rest in the contract for the full term that you committed for? And try and get your customer to also look at the bigger picture of the situation and just say to them, you've got to compare apples with apples. And that's all you can really say to the client at the end of the day, is that they've got to compare apples with apples, and speak to the quality of what you're doing. Somebody said to me, every ethical dilemma has an economic consequence, and people do pay for good ethics as well, because they'll get taken once by that, and they won't get the second time around. They'll be coming back to you.
Cool. So just picking up on this discussion, Andrew, is your hand up again, or is it the same hand, Andrew? Are you there, Andrew? I'm assuming it's the same hand, Andrew. Cool. Okay. Well, so let's continue. I think we just got another 30 minutes more just to wrap up the more engagements and questions.
Oh,
But it's
so much to talk about.
yeah, it's fantastic. So no, but I think we've done great. We started the conversation, and I like what you did. You started it off, with the cost, the heart. We went into the financial management. I think it's opened many people's eyes as if they're really getting it right, or they're not doing it right, and they're doing it every month, and how quickly they're doing it. And then you got the conversation of, it's all of that is important, but then getting it converted or building in for the best possible way. Whether you're going to wait for 60 days or 30 days, build it into your cash flow model, and managing that cash cycle as best as possible.
And know that there's a time value to money. So one of the things to be careful of, because especially in South Africa, the deferred payments and the longer it takes money to come in is actually meaning that money isn't worth as much because of inflation and because of all of these things. So Akash's point earlier to say that if there is going to be a delay in getting your payment, and there's a delay in getting that payment, you do need to factor that into your calculation, because 100,000, Akash, if I lend you 100,000 Rand today and you pay me back 100,000 Rand in a year's time, what I can buy with that 100,000 Rand in a year's time is not the same as what I can buy today. And that thought needs to be built into your work. And I think that's one of the biggest problems. The comment around how suppliers will pay, your customers pay and you've got to pay up front, they're stretching their cash flow cycle and they're making it your problem. And it's because they're big and powerful that they can do it. If ever you can get deposits, take deposits. Okay. Take as much as you can up front when you can. Just sort of see what your negotiation rate can be. Yes, there might be retentions that they can keep, that 10% retention, but try and get milestone payments as well. If you've got things that are going to take time, try and negotiate that. Yes, you acknowledge that there's this final payment that might take some time, but see within that whether or not you can have a milestone or certain other, like a deposit up front, and try and get other ways of doing it. The net 30, net 60, what that means is that if you pay within 30 days, there's usually like a 5 net 30 or a 10 net 60 settlement discounts. Okay. If you've got with your suppliers in that particular, and by the way, settlement discounts don't always work for you. You've got to work this out to see if it's worthwhile, because sometimes you can do this to your customers, and your suppliers will do it to you. If you pay me before 15 days, you get a 5% discount. Otherwise, you've got 30 days to pay. Okay. And trade credit is generally like your cheapest credit, but that 5% settlement discount might be you paying money out of your overdraft to pay your supplier early. And that 5% you're paying to pay your supplier early is actually more expensive than just leaving your money in your overdraft. So you've got to also just look at this and say, rands and cents, does it make sense for me to draw out of my overdraft to pay my supplier early when I'm paying interest on my overdraft? Otherwise, just waiting to the 30 days where I wasn't paying interest, I wasn't paying anything, and paying it 30 days. Okay. Don't always be in a rush to use settlement discounts and all the rest. If you are, for example, you've got an overdraft or you've got money that you're paying interest on, is one of the thoughts as well. And if you offer a settlement discount to cash, sometimes that 5% that you're offering them to pay early is your gross profit that you just gave away.
Yeah.
So you've also got to be careful about those things. So, what we've spoken about here, you track your cash flows, know what's happening, try build up a bit of a reserve. I know that's going to be really hard. Nowadays, most of us are working in overdraft, and most of us are working with a lesser space. But yeah, we've spoken about a lot of this is in the notes, and a lot of this is we've got to now. What I want to do is get to the other, seeing as how time is starting to march on. Once, on the one side, as financial managers, as people that are in the space, we spend maybe 60-70% of our time worrying about our sales price, worrying about our costs, worrying about inventory. Don't carry more inventory than you have to, because inventory is cash sitting on your shelf. Okay. You got it. There's a sweet spot with carrying inventory. There's amount that you have so that you don't run out. And then there's too much sitting on your shelf, which is basically cash sitting on your shelf that should be in your bank account. So inventory is monitoring your inventory, managing your inventory, making sure your inventory is safe is just as important as monitoring my bank account. Okay. Stock and inventory is very critical to managing. But then, you know, we worry about making sure our debtors pay as quickly as possible, taking as long to pay our creditors before we get penalized. We spend a lot of our time doing that. But then the other side of what we're doing is, how is our business financed? Okay. The accounting equation that Akash and I live our lives by, and I always say solve all the world's problems, is essentially every business, you've got your income statement, your profit and loss, that side of it. But then what do you own against what do you owe? So what are the assets that you have against who you owe money to? Okay. Now in service businesses, this is a problem, because in service businesses, we don't always have a big asset base. We don't often have a lot of machinery and motor vehicles and buildings and land and all the rest that can be good security to raise debt. Okay. And the assets that we have get used up and disappear quite quickly. So we've got to look at the type of assets we own, because those assets are generally counted by the debt that we have on our balance sheets and by the way that our company is funded. Okay. Now, when we talk about this, and one of the other things I spoke about liquidity, and I sort of said being able to pay your debts as they become due as a health check. The other health check is, do you have more assets than what you owe people? Because that is the equity in the business. That is what the owners get. I always say the owners of a business, the shareholders of the business, we table 13 at the wedding. Okay. We get what's left over once everybody else is fed. So if you think of yourself as a business owner, you are the one, you table 13 at the banquet. You're trying to put as much food on that table as possible. That's your business. That's what you're trying to generate. And everybody else that you owe money to, your creditors, the bank, everybody else, they are in front of you at the queue feeding from that banquet. Okay. So you've got to be very careful about who's invited to the party and how the party is structured. And this is something that you've got to manage, and the type of debt you have, who you owe money to, is quite critical as well. I found in COVID, people were taking loans out because of desperation from all different places. And after that, they got into trouble because they didn't read the fine print in the type of debt they got.
You know what I see most often? So I see, I don't know, 2,000-3,000 businesses a year, right? A year, Karen, in the programs as an overview. But the common one, you're talking about assets and debt, and, you know, lots of them blur the lines. You know, they take all their personal debt and try to put it in the business. You see people buying the Jaguar. You see people buying, you know, the Mercedes Benz. You see and then you look at this and you say, is this debt really needed for the business? You know, and blurring the lines. I know some accountants will advise them, oh, tax deduction, you know, but the reality is, colleagues, is what Karen is just saying to you. As an owner, technically, you're the last to eat in that particular opportunity. And you have to make sure that everything is lean. So there is something or lots for you to eat at the end of the journey. Don't be misruled by accountants that tell you, hey, you must buy your car, put it in the business, or do A, B, and C into it. Because many business, and don't live an extravagant life beyond your particular means. And I see that so often, you know, different expenses in a business. I see cars and I say, but it's a construction company. Why does it need a Jaguar? You know, as an example. Or why does it need, you know, A, B, C, D, you know, E, F? I'm just using an example. And colleagues, you have to be very, very mindful. And it's so easy to do that and tempting. You agree, Karen?
Absolutely. You know, one of the biggest, when you see a company's balance sheet that doesn't look healthy, one of the things is maybe the value that the company has isn't on the balance sheet, but often it's the shareholder loan accounts. It's the way that the owners have drawn out of the business for things that aren't operational. So the first thing that you need to do when you manage a business is the resources of the business must go to running the business. The cash that's generated from sales and from making this business must go to making more business. Yes, the directors can take a salary and to have it for a standard of living, but the business is its own person. And I think often in South Africa, one of our biggest challenges, Akash, I get is it's my business, and therefore there's no separation between me and the business. Now, unfortunately, when things get tight and tough, people are going to look at this and say, well, did you take out from this business what actually should have stayed in the business to make the business healthier? And what needed to stay there. And that often is a problem that I see as well, is that the shareholder loan accounts are a challenge, because again, the resources must go back into the buffet. And as the business owner, be careful and considerate about what you're drawing out of this business for your personal use, because you've got a responsibility to more than just yourself. And that is something, it's a hard conversation to have sometimes, but as a director, you've got a responsibility to all the stakeholders. You've got a responsibility to employees, to creditors, to debt providers, to the tax man, to make sure the business survives, and your needs and your wants are last. And I always say directors need to check that at the door, whilst they're making sure that everybody else is taken care of. So when we look at how we finance a business, because the other side, people say, well, I put money from my bond into the business. You've got two types of funding to the business. There's debt, where debt is obligation. So remember, if somebody comes to you and puts debt into your business, you've got an obligation to repay them. You've got an obligation there's a cash flow here. You're going to stay awake at night going, at some point, I need to pay these people back. And more than likely, I have to pay them interest as well. So debt has got cash flow issues, because debt, you're going to have to pay them interest, and because nobody's going to give you their money for free, and you're going to have to pay the capital amount back. So there's stress to that, because you're going to have to pay back cash flow, and it's an obligation. It's a requirement to pay it back. If you give equity, so some people say, well, I'm going to raise shares, I'm going to sell people shares, or I'm putting my own money and I'm raising shares. That's a control issue, because if I give Akash shares in my business, Akash can vote in my business, Akash can have control in my business. I'm not the sole owner and the sole person responsible here. And maybe I don't like that. Maybe I like being the sole owner of the business. So you've got to look at the type of money you come into. Each type of money has different strings attached to it. And you've got to be careful that what type of strings you get, can you live with it? Okay. Short-term debt is more expensive than long-term debt. But long-term debt, they're going to want more security.
Yeah.
And do you have the security to give them? Be very careful about signing sureties. Those sureties don't disappear. In my business, Akash, I work a lot with business rescue practitioners and lots of those people. And the first thing that we say to me is, Karen, please tell me that the sureties have been cancelled. Okay. Because a lot of banks and people come to you and say, yes, you can have this money. Here's some more money. Akash, lots of money. Samantha, here's lots of money for you, but please can you sign your personal house to me? Yeah. Please can you sign your firstborn child to me? And when things start to get a little bit uncomfortable, they will call it. They won't be shy to call it. So, and also be very careful about giving the same asset to more than one person.
Yeah. Which is very interesting. I know there's one or two developmental financiers that don't take your primary residence as surety. like the IDC, they'd never do that.
Yeah.
You know, that's a
The banks
developmental.
will.
The banks will into it as well. We're actually trying, colleagues, to get the IDC to come talk to you guys and one or two other developmental financiers in one of those fireside chats into it as well. Okay, cool. Karen, we've got 15 minutes more to go, and I'm not sure. I think it is a fantastic session, Karen. I think we got into some of the core meat. And colleagues, the whole idea about these sessions is engaging. Karen is on the chat, you know, for answering some quick questions. And I think over the next few days, you can continue to do that. But the journey is that it's just to engage and enable. I've had 2 emails of, you know, people, as you said, that we want to set up maybe some quick half-an-hour huddles. Absolutely, let's do it. And to do it, I had a 3rd email, Neil, somebody saying that we must set up a meeting together, you know, to chat together on a separate particular matter. So the whole idea about today's is to reignite that thinking around financial management. And I'm not putting your accountants down, colleagues, and I'm being very, very responsible. We just trying to bet best for your businesses, and we're doing it in a responsible manner. Both Karen and myself are members of SAICA, and we're actually on the council of SAICA. So we're not saying, giving you advice that is irresponsible in anything that we're doing. We're just saying, you know, the tricks of the trade, what we're saying, the shortcuts are not responsible sometimes. Just be very, very cautious into it. So I don't know if there's any other, there's some sources of finance. Oh, my favorite is enterprise and supplier development funding. Go for it,
Well, before I get there, just to speak to your point, I think the most important thing for me, for the audience that you have here, Kash, and I said it in the marketing video, the video that I was inviting everybody to the session, is you and I have spent years fine-tuning our knowledge and our wisdom in financial management. We speak financial management and finance fluently. This is our language. This is our space. But people that work with us, it's a foreign language to them, and it's a foreign idea to them. And we have got a responsibility in the space to introduce them to know enough to be able to navigate into this space, so that when you go to your accountant and you say, I want regular management accounts, and I want to understand what I'm spending money on, and what the trend is on my costs, and all the rest, and you can actually ask questions, you can interrogate, you can ask for explanations, and you know enough to ask that information and to understand what they're saying to you. You'll never be fluent to the level of a financial manager or to this person, but you need to know enough to know that there's a problem, and you need to know enough to ask a question. And I think if you can achieve that, I think that's huge, because that means you can take responsibility and accountability for your business. And it's your business. It's the business that you need to manage. When it comes to sources of finance, there's 2 things that I want here. One is, you know, please take care on who you take money from, but also read the fine print. So any person that's going to offer you finance, you need to show that you are responsible and you are able to do what you need to do. And so, you know, we've had this conversation around, and the broadest sense of it, I suppose, is loan covenants. There are certain requirements that people are going to ask for in the debt or the money that they give you, that you're going to have to keep up to date. And not all of them are financial. So some of them is keeping your BE status up to date, for example. One of them is keeping your relationship with SARS healthy. Now, if you're getting behind in your payments with SARS and you're having a challenge, you know, paying your PAYE and paying your EMP, please submit your returns. Be honest, be upfront with SARS. Don't play games with SARS. SARS has got, it's a goldfish bowl. SARS is watching you, even if you don't know that SARS is watching you. But speak to SARS about, you know, compromises or arrangements and payment plans if need be, for the reason that you need to keep your tax clearance certificate good, so that people can see that you are compliant. Make sure that your returns are in to SIPC. Make sure that the paperwork is done. I know the paperwork is annoying, but it's really, really important that these I's are dotted and T's are crossed, for the bigger picture. Because when you go to these other places, the traditional sources, I would have said, are the banks and the financial institutions and the normal people that you talk about. The first thing they're going to want to know is that you've been managing your business carefully in all the other things that you do. that you haven't been a cowboy, that you haven't just been, waking up each morning trying to put fires out and not taking care of the bigger business, that you're responsible. Okay. And then be creative about who you speak to. Okay. Because like Akash was saying, enterprise supplier development is massive. Okay. And there are a whole lot of people out there that'll want to partner with you, and it's to their benefit to partner with you. Now, Akash, you would speak to that point far more than I can. I'm more of a traditionalist in this space with the businesses that I work with. But there's an amazing amount of finance that's available. And my lesson in all of this over the last few years has been ask. People sometimes think that they don't qualify or they won't get it, but they're quite surprised that if they put their hand up and ask, what's available.
Absolutely. Yeah. And I think the other thing is target. Colleagues, you'll always say with enterprise supply development, we got a special session actually, how to get AI to teach you how to write your supply or enterprise development proposals. We got another session on partnerships, for the colleagues to show them how they go about along the whole value chain, how they can get, opportunities for enterprise and supply development. Colleagues, it is such a live space, and maybe some of you are not exposed to it, but we get to see the other side, and there are millions and millions of grants, and that we see getting passed to and from different beneficiaries, and I'm not saying, and please, I'm not only saying to look only for Anglo-American, but you can look at all the other mines programs, or you can look at small medium practices to get them compliance. So there's little tricks of the trade, and we're probably going to have another session with them, Karen, to show them how to write their own enterprise development proposal within 30 seconds on ChatGPT, as an example. So yeah, into it as well. So colleagues, we are about to wrap up. Karen, we've got like another 8 minutes more. I just want to make sure, we don't leave out of the rush. Colleagues, there's no more new questions on the chat. Marinda, is there any more questions on the chat? I can't see the actual thing. I don't see light of the tunnel. It hits me by the times. My downfall has been uncontrollable cost. Alice, I'm sorry to hear about that. Colleagues, if there's any other closing questions or remarks or comments or shares that we have from yourselves, I'm not sure who's that. Hello,
Stephen.
I think Stephen.
Yeah, it's Stephen.
Stephen, your hands are up, Stephen. Or are we getting some feedback? Stephen, are you there? You want to maybe unmute and ask your question? Unmute, Stephen. Going once. Stephen?
Yes, good afternoon, everyone.
Azad.
Thanks, Akash. And thank you, Karen. Yes, this is one session that really requires attention, and there is a lot to take in.
Yeah.
But it is definitely indispensable. I have a question regarding the management accounts.
Yeah.
Yes. What can one say that would be the minimum that this account should entail? And the other thing is, we spoke about trying to engage more with our accountants to make sure that we get basically value for money. So what are the basic footnotes that one can ask from the accountant to be included in the management accounts? Because sometimes I think from my experience, what I've seen is that for example, when trying to track assets, you wouldn't know, for example, whether or what type of asset depreciation method is being used, whether it is a straight line or declining balance. So what are the things that one can say to the accountant, at least in my accounts, state these things? And is that acceptable for would that be then a fair request for management accounts? Because in order to track these things, you also need to understand basically what informed the decision or why informed the practice. So yeah, that's basically it.
It's a brilliant question, and one that I want. I was, when I was trying to prepare for this, you can see I was like, okay, well, let me try and sort of put something together in Excel, and play. And I actually stopped for the very reason. So first off, I want budgets and actuals and variances. I want, there's certain things that you're going to want to measure. Maybe you're measuring your salaries against your sales or whatever it is. There's certain things that are going to mean something to you that you are going to want to measure and that you're going to want to be careful of. But the message, if I said nothing else to this audience, was your management accounts belong to you. Okay, your management accounts are yours.
Yes.
And so the basics that you should get, the core that you should get is your profit and loss monthly at a minimum, with against budget year to date. Looking at the changes, the variances, to see when things are up and things are down, so you can see when things are creeping or going in the wrong direction. I want to see, like you said, if your working capital, so what are your inventory levels and your cash flow levels and debtors. I want to see an aging of my debtors, because I want to see how long it's taking for debtors to become cash.
Yes.
I want to also see what my creditors are, and whether or not there's some creditors that I'm having some problems with. I want to, if my assets, if I'm really having to pay attention to my assets, I want to know how old my assets are. And for assets, if I'm very capital intensive, how much are you spending on repairs and maintenance? Because there's all assets as engineers, there's a point where you start spending more on repairs and maintenance than you should. And maybe that's something that you're needing to manage. Maybe it's the life of the asset is starting to get too expensive. So maybe I'm monitoring certain line items like repairs and maintenance. Maybe I'm monitoring line items like fuel, or there's certain key expenses that I need to keep track of that can run away quite quickly. So you've got to look at these items, and what I want in management accounts, I want them to be things that are, first of all, sensitive to change, because I need to be able to adapt if they are getting out of hand. I need the things that are worrying you in the middle of the night. So maybe, for example, what about overtime of staff? Because overtime can be a seepage. Why are staff spending so much time on overtime, and did I factor that into the contract? So you'll have your basic, a lot of accountants will just give you an income statement. They'll just give you a profit and loss statement. They won't even give you a balance sheet, Akash. They won't give you a cash flow statement.
I agree with you. So Karen, we also, lots of the colleagues, as you say, you and I live, and because we eat, because we qualified for a long time as CAs. But colleagues, I just want to share with you, the reality is, every time that you need to do something, in your business. So if you ask the question that Stephen asked now, we're going to teach you how to use this, going forward. So what are the important things for management accounts? You can also use this tool for everything. For we'll say small businesses in SA, and then you can see, Karen, there's not one particular thing, but you can hone it out for your different types of. But there we are, boom! You can see the cash flow, the cost control, everything, the budgeting forecast that Karen told you. Profitability is important, break-even analysis, and. So there's different things that you will find that is key. Some businesses, so if you're an inventory heavy business, you'll have more inventory related, kind of things into it as well. So, but colleagues, we're going to have a session specifically for ChatGPT, but you can still use it. It's free. If you have any questions, you can ask yourself. So it doesn't have to be mirrored, but we're going to teach you how to curate that in coming weeks. Colleagues, we are now 13:30. The conversation is not over. Paul and Jacques, I've got your emails. Thank you. I'll set up some stuff as such. So thank you very much for your time. You can still ask questions on the chat, and we will still answer it over the next few days. But remember, myself, Richard, and Neil and Samantha are here for you with many, many, many more weeks. But Karen's also volunteered. The odd person that needs help, she's going to help you as well. So, colleagues, let's keep the conversation going. Karen, absolute deep gratitude. To you, a very engaging session. I think very, very well received. I don't know if you have any closing remarks before we put my colleague Samantha on the spot to figure out who won the tablet and who won the laptop computer as such. But any closing remarks from your side, Karen?
I did have a slide that said in conclusion, and there were 3 points that I had on the slide. And no, that was me, not you. But it's the 3 points that I wanted to have on the slide were simply keep your finger on the pulse.
Yeah.
I can't. I seem to be sharing this. I didn't mean to be sharing this.
You can't say it.
Okay, no, awesome. Keep your finger on the pulse. I think that's, to me, the most important thing is don't lose track. Don't get so busy doing everything else you do that you don't spend 15 minutes a day keeping track of the finances. Be agile and be prepared to pivot. I think that is one of the most key things when you're in small business is you don't be so set that you can't change direction, you can't adjust the sales. You've got to be able to be agile and pivot in the circumstances that you're in, which is why you're keeping track of what's going on so you can make the necessary adjustments. I think that's really critical. And at all times, keep the big picture in mind. Keep the larger picture in mind as well, as to what you're trying to achieve and where you're trying to get to, and what you're working towards, because there are going to be ups and downs that are within it, but keep the direction that you're trying to get to at the same time. And if you keep that in mind, hopefully you'll get out of this to get to where you want to get to and how you want to get there.
Cool, fantastic. Thank you, Karen. I think the conversation still continues. Karen's on the chat. We can ask questions. And colleagues, as I've explained to you, myself, Neil, Richard are here. So if you want to have, if you're worried about your management account, send it to us. Maybe we'll have a look at it, see what we could advise where to do, even if it means us trying to find an accountant and like into it. But our job is to be the guardrails as best as possible. Our job is to bat as best as possible. Samantha, over to you. You have the honorable job of identifying who was the best questions and who was the most engaging for the laptop. Best questions for the tablet. And then, Miranda, we have to get the tablet to the person before the next session Wednesday. So that's the trick, just like Cello and William as such. Go for it. Samantha?
Thanks, Akash. Firstly, Karen, wow, that was really great. Thank you so much. I know you tried to squeeze in as much as possible into a small session, but it was brilliant. Thank you. Food for thought. Okay, so it's first up for the tablet is Alice.
Okay, fantastic. Alice, well done, well done. I see you were also asking questions last week. Congratulations, Alice. Well done. Super well done to you, Alice. Cool, okay. Excellent. Who gets the laptop?
Okay, and that goes to Mpho.
Mpho, oh, fantastic. Mpho, congratulations. Oh, the one that's got the big headache with his 2022 accounts and he's sharing his problems. My God. I sound like what's it, a business psychologist. Well done, Mpho. I've got your email to set up the huddle with Karen. We'll set it up and we'll take that conversation. But well done. Your laptop computer hopefully will be with you in Katu by next week, Wednesday. Colleagues, thank you so much. It's not the end of the conversation. Miranda will download this later today and will share it on YouTube so you have access to this particular thing on. And I encourage you to share it with other people in your business. Other people, even the handout that Karen very cordially did. And maybe, Karen, if you can email us a copy of the slides, we can also on-share it in the chat and email it, Miranda, to the rest of us. But colleagues, thank you so much for your time. Take care, and we will see you next week. Next week, we're hoping to have a session on leadership and partnerships, such. But I think even before that, we got a fireside chat. We got linkages. We're trying to bring 2 or 3 different product companies in to see if there's an opportunity to diversify, add new services. And, everyone's talking about, everyone's doing the same thing. They're cost cutting, they're lowballing. And we're saying, is there an opportunity for this 43 can we bring in new partners to offer new services on A, B, C, D? Colleagues, thank you so much for your time. It's 4 minutes after the time. Karen, deep gratitude, and hopefully you'll be still in the conversation with us. And we'll see you soon. Next week, Monday first, and then after that, Wednesday as well. Bye, colleagues. Enjoy the afternoon.
Thanks so much.
Thank you,
Bye-bye.
everyone. Thank you for
Bye.
having me.
Bye,
Bye.
Karen.
Bye-bye.
Bye, guys. Bye-bye.